Hello, my name is Lynn Krebs. I'm a research economist with the Texas Real Estate Research Center at Texas A&M University. Well, since at least 2019, the Texas legislature has made property tax a top priority for their focus on how to improve the system for property owners. In particular, homeowners have been in focus. Over the last 5 years, they have looked at things like the tax rates, the rate at which cities, counties, school districts, local governments have been growing their budgets and relying more and more on property tax. So state and local governments are funded by a variety of revenue sources. Those revenue sources, primarily taxes, sales tax, and property tax are the two biggest ones in Texas. The number one state funding source is sales tax, and by far the number one local tax revenue source is the property tax. And there are rules that apply across the board for all local government. In addition to that, there are also nuances that apply to each one of those types of entities. Particularly schools are unique or have unique rules in regards to revenue, exemptions, and so on. And cities and counties have rules as well that are similar but different than school districts. For many years, Texans have been increasingly concerned about the growth of their property tax bills, and the easy target has been the rise in value. It's kind of ironic in a sense because we want to be happy about an increased value of any asset that we own, right? Everybody wants to see their assets grow in value. But the challenge, of course, with property tax is that generally means that your property tax bill also rises commensurate with that value increase. And that's really a big part of what the legislature's been taking a look at, trying to mitigate the effects of rising values. And I would present that they've succeeded, particularly in regards to the school tax, in decoupling to some extent the rise in value with rise in property tax. Property taxes state by state gets really complicated, and this really gets to kind of the heart of the opening of my blog. When we just talk about one property, for example, it's fairly simple. We can talk about what's happened to that one property. When we talk about the entire tax roll, all the properties that are subject to taxation, it gets really complicated because different rules apply to different property types. Not all states tax all the same things either. Some states don't tax business personal property and so on. So the best way to compare not only the state to itself over time, but the state to other states is by calculating what we call an effective tax rate. An effective tax rate is actually quite simple. It is the rate that you come up with when you divide your tax bill amount by your market value. So for example, the actual tax rate on your tax bill might be, 2.5%. But then when you look at what's the effective tax rate, once you've taken into consideration the exemptions that may apply and other things, that tax rate might only be 1%. That's the best way to compare it across, time as well as across states. And so where Texas applies or currently falls among other states, we don't really know yet. And the reason for that is data from all the states is not yet available for the most recent completed tax year. Through 2021, Texas was ranked by the Tax Foundation, which is a national foundation focused on tax policy, at the 6th highest effective property tax rate. So we have one chart that's showing the percentage of market value that's taxable or currently taxed in each of those last several years. And we're just showing that the amount of your market value that's subject to tax has been declining. Now that's going to vary by property type. For example, a commercial property type is going to be taxed generally at 100% of market value. The homesteads with the exemptions, the percentage of your value taxed is less than 100%, and the amount, that's excluded or exempt, if you will, in percentage term will vary based on your home's value. For example, if your home is worth $100,000, your tax rate or the percentage of your market value that's taxed is 0. If your home is worth, $300,000, then the percentage of your home value that's taxed is 1/3, 2/3 is taxed. The first 100,000 being exempt and 200,000 being subject to the tax. So when you look at all property types, Texas is running at something like 62.5% of market value was taxed in 2023. That's down significantly from the mid 70% a few years ago. So one simple way to sum up the benefits that taxpayers across Texas have achieved as a result of the changes the legislature, the governor have signed into law since 2019 and particularly in 2023 are that our taxes are not going up as high as our market values. For example, total property taxes last year went up 4%. Market values across the state went up on average 11%. Okay, so property taxes did not keep pace with market value, and that's in large part because of rate compression and increased exemptions, particularly in regards to homesteads on the school property tax. And what I really wanted to explore in this blog was the impact of the most recent changes that the Texas legislature has made that apply specifically to school districts, because that's where we've seen the biggest change in people's property tax bills. In fact, in many cases, a reduction in property tax bills, at least certainly reduced compared to what they would have been absent those changes. So beginning in 2019, the Texas legislature started to implement new changes. First of all, they restricted the rate of revenue growth for cities, counties, and school districts, and those went into effect at that time. In addition to that, in the next legislative session and effective tax year 2022, the school district homestead exemption was increased from $25,000 to $40,000, meaning $40,000 of your home is exempt from taxation from school districts. That does not apply to counties and cities. They have different rules that are optional for them in regards to how much of an exemption to grant for homesteads. But for school districts, that exemption was increased across the board, across the state, from $25,000 to $40,000. And then again in 2023, they increased that substantially more from $40,000 to $100,000, meaning the first $100,000 of your home's value is exempt from school tax as of 2023. So in 2023, a market value of properties subject to tax were up by 11%, but total tax collections were up 4%. So you can see this decoupling that's effectively taken place as a result of rate compression and exemptions, such that our tax bills are not going up, our tax collections are not going up as much as market values. And I think that addresses the concern of a lot of property owners, particularly homeowners. And the impact is even greater if you were just to look at homesteads, for example, because those numbers I just quoted include all property types. The biggest exemptions that now apply are to homesteads in regards to the school tax. In some ways, the state legislature's attempts in regards to reining in property tax or limiting property tax is a little bit like whack-a-mole. As I said before, there are different rules that apply to school districts, to cities and counties, and to special districts, okay? And when you look at the total property tax collections, you'll notice that the total property tax collections continue to be on the same trajectory that they were on prior to 2019, and we're now over $80 billion in total property tax collections. Now, a lot of that is due to the economy's growing, right? We have a lot more properties, values are increasing because the economy's doing good, jobs and incomes are doing very good. So that's totally understandable. But the distinction I want to make in this case is that the property tax revenues have actually declined since 2022. We all welcome that news, but then in my next blog, I'm going to look at counties and cities and special districts as well. Whereas this time I focused on school districts, we also want to look at what's going on within those other categories that the legislature may or may not want to address in the next session. You know, when we hear discussions about eliminating property tax, first of all, we realize what a monumental task that would be, with total property tax collections exceeding $80 billion now, and school tax alone exceeding, running about $40 billion. It was over $40 billion in 2022. Nonetheless, we're talking about really big numbers. And so, I think the legislature has just made the determination that, hey, we really want to focus relief efforts on homeowners. We don't want to tax people out of their homes. And so that's really been where the relief is. When you hear discussions about the idea of eliminating property taxes in general across the state, you have to realize that would impact local control of a number of sources. For example, think about your city and county government property taxes and what they fund. If we were to eliminate all those things and all those things would be funded from the state, that would change the dynamics around emergency services and other things of that nature. So one key takeaway from this recent blog is that total property taxes have exceeded $80 billion for the first time ever. and that occurred in 2023. And that's understandable because the Texas economy has grown. It's grown actually much faster than the national economy. Population has increased significantly and so on. But even with that growth, school taxes have actually been reduced significantly from 2022 to 2023. And so that's a interesting contrast, and I want to look more carefully in the future at the other tax entities, cities, counties, and special districts.